Q4 FY24 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need an assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Basudev Banerjee from ICICI Securities. Thank you, and over to you, Mr. Basudev.
Thanks, Manav. Good evening to all the participants. Thanks to the top management of Automotive for giving us the opportunity to host the call. We have with us the top management represented by Mr. Kuldeep Singh Rathee, Chairman and Managing Director, Mr. Aman Rathee, Full-Time Director, Mr. Naresh Kumar Sharma, Chief Financial Officer, and Mr. Sanjeev Arora, SVP Financial Strategy and Head of Investor Relations. The updated presentation has been posted on the exchanges. So without wasting any time, handing over the call to Rathee. Over to you, sir.
Thank you, Mr. Basudev. Good evening, ladies and gentlemen. It gives me an immense pleasure to welcome you all for our first post-IPO earnings conference call for the year ending 31st March 2024. I firmly believe we are in the midst of exciting times, both as a country and as an industry. As per CM, two-wheeler segment continued the recovery path with a growth of 10.3% in vehicle production in FY24. Rising demand from the urban sector and recovery in rural segment due to strong festive and wedding season enabled the overall automotive sales to grow by 9.2% year-on-year across all segments as per CM report. The prospects of our economy continue to remain bright, with all macro indicators pointing towards growth of the automotive industry, which in turn provides opportunities for ASK. With the above normal monsoon forecast by IMD, we are hopeful of a strong rural recovery to aid the performance of the two-wheeler segment in the coming financial year also. During the financial year 24, ASK Automotive delivered robust performance across all product segments and recorded an impressive growth in revenue, earnings, and margins. This is the result of our concentrated focus on expanding value-added businesses, improving on the cost efficiencies, and driving towards excellence. Let me briefly talk about the consolidated financial performance of FY24. For FY24, I am excited to share that we have outperformed industry growth and delivered robust performance with 17% revenue growth, 26% EBITDA growth, and 41% PAT growth. In Q4 FY24, we delivered a strong performance and recorded a consolidated total income of rupees 786 crore with 38% YOY growth. Our total consolidated income for full year FY24 stands at rupees 3,005 crores with growth of 17% year-on-year. Our all three product segments performed well in FY24 in terms of revenue growth. We have sustained market leadership position in the advanced braking system. Our advanced braking system revenue grew by 23% in Q4 and 7% in FY24 on year-on-year basis. The aluminium lightweighting precision solutions revenue grew by 73% in Q4 and 29% in FY24 on year-on-year basis. The safety control cable revenue also recorded growth of 32% in Q4 and 36% in FY24 on year-on-year basis. In line with our business growth strategy, we have strengthened our position in the EV segment and recorded revenue of rupees 120 crore in FY24 with 133% YOY growth. We have also significantly expanded our export business and delivered revenue of rupees 147 crores in FY24 with 58% YOY growth. As expressed in the previous interactions, I am delighted to share that we have achieved double-digit EBITDA margins at 10.9% in Q4 and 10.4% in FY24, compared to 9.6% in last year. We are confident to improve the margins further. Improvement in margins during FY24 were mainly driven by better economies of scale, improved volumes, better product mix with the customers, and continued focus on cost optimization. Our EBITDA for Q4 stands at rupees 86 crores with 71% YOY growth and 311 crores in FY24 with 26% YOY growth. We have achieved a PAT of 48 crores in Q4 FY24 with 112% YOY growth. This includes one-time deferred tax gain of rupees 3.5 crore recognized in ASK Automobiles Private Limited, which is the wholly owned subsidiary of ASK Automotive Limited. Our FY24 PAT stands at 174 crores with 41% YOY growth. We have turned around ASK Translate joint venture for our CV business in FY24, in which we have 49% share. Our share of profit in JV improved from losses of 6 crores in FY23 to profit of 16.5 crores in FY24. This includes a one-time deferred tax gain of rupees 6.8 crores. As a result, the EPS has increased from rupees 6.2 in FY23 to 8.8 in FY24. We have delivered strong returns in FY24 with ROAC at 23.6% and ROAE at 23.7%. We have also improved our debt profile with debt to equity reducing to 0.42 against 0.49 in last year. Our average debt to EBITDA is at a reasonable level of 1.06 in FY24. The total debt for the company stands at 342 crores as on 31st March 2024. Our capex spent for the year was rupees 285 crore, mainly to build capacities for future business growth opportunities. Delighted to announce that considering our good performance delivered in FY24, the board has recommended dividend of 50%, that is rupees 1 per equity share of face value of rupees 2 each. I would now like to give you updates on the recent capex and on the new key initiatives undertaken during the year for our future growth. As a capex update, we have invested rupees 380 crores up to March 31st, 2024 to set up our large manufacturing facility in Karoli, Rajasthan, to cater to upcoming demand of our customers. The commercial operations of the plant has already started and expected to be generating cash profits from Q1 of FY25. This will cover our revenue growth of the next 1 to 1.5 years. We also plan to invest 200 crores for setting up a new manufacturing facility in Bengaluru, Karnataka, to cater to the OEMs established in the southern India. The plant is expected to be operational by Q4FY25. This will be our 18th manufacturing facility and the third one in South India. Key new initiatives. We have ventured into a new strategic partnership for HPDC alloy wheels for two-wheeler with technical assistance from Liho Machine Works Limited, Taiwan. Currently, the alloy wheels are produced in India using gravity die-cast technology. We'll have the first mover advantage to produce the alloy wheels using HPDC technology if this gets accepted and established with two-wheeler OEMs in India. This is a new technology and being tested with the leading company of Taiwan, that is Liho, which has successfully used this technology overseas. HPDC alloy wheels are lower in weight, resulting in better fuel efficiency. The progress in this segment will be known in Q4 of FY25. In April 24, we have signed a strategic joint venture agreement with Aisin Group. As you all are aware, Aisin is ranked amongst the top 10 global Tier 1 automotive suppliers of the world. This joint venture is to market and sell auto components in independent aftermarket for passenger car products. We are working on the formation of the joint venture company with 51% our stake. In the PV segment, Aisin has a wide range of product basket, and this will complement us as ASK has established a network of dealers, large network of dealers in independent aftermarket of India. The business plan is being formalized jointly with Aisin. As the ESG initiative, since we are as a part of our ESG initiative and transition towards renewable energy, a solar power plant of 9.9 megawatt is being set up in Sirsa, Haryana for our captive consumption with an investment of around rupees 48 crores. This plant is expected to get commissioned soon. Going forward, our revenue will keep expanding in the aluminium and safety control cable segments as evident from the current year results. Being the market leader in advanced braking system, the business from this vertical is expected to grow in line with the industry growth only. With lightweighting and thermal management being the focus area of domestic and global OEMs, ASK is aggressively looking to utilize its aluminium casting expertise to expand business footprints both in India and globally. The newly added capacities in Karoli, Rajasthan, and an upcoming new facility in southern India, Karnataka, will help us scale up the growth. With continued growth momentum in the auto ancillary sector, we are confident of our ability to outperform the industry and better our margins and return ratios in FY25. We are committed to keep contributing towards the value creation of our stakeholders through innovation and conscious expansion. Thank you very much for your patient hearing. With this, we leave the floor open for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have our first question from the line of Pranay Roop Chatterjee from Burman Capital Management. Please go ahead.
Hi, good evening to the team and everyone present. Am I clear and audible?
Yes, please.
Thanks. So my question is with respect to your die casting division, which is called as ALP. I just wanted to understand and etc. So which are the ones that we are doing currently, and also if you could highlight in your die casting revenue, how much is the mix from machining? Like for example, machining revenue as a percentage of total die casting revenue.
So currently, in our portfolio of aluminum products, we are doing high pressure die casting. So we don't do the low pressure die casting or gravity die casting. High pressure die casting is what we specialize in. Regarding the machining value addition, it is constantly our endeavor to do all the value addition in the product. So most of our products are machined products and also requires further value addition in terms of retesting, in terms of assembly, and also sometimes the printing.
Got it, sir. So, okay, that point is clear. Secondly, how much of your die casting revenue currently would be from two-wheelers?
So, except for around one, I don't, not the exact, going into the exact figures, but around 120 crores of revenue comes from the tier ones, where we supply to the tier ones like Denso and others, and then they supply to the passenger car. Except for that, and some of the export requirements where we supply to non-automotive segments also. Except for that, the rest comes from the two-wheeler segment.
Perfect. And so, when I talk about the die casting business, along with, like you said, machining and value addition, on a blended basis, in case you are able to reveal, what could be the EBITDA margins that a business can clock within this segment?
So within the segment, it's very similar. I can say that the aluminum is slightly less than the other segments, whether it is the friction or the other. But yes, because of our better product mix and more revenue coming from exports and other places, the mix is becoming very similar, and the EBITDA margin is also looking very similar.
Got it. So if I got you correctly, it's slightly dilutive, but if you reach the level of value addition that you target, then probably the margins would settle at your company level. Is that what you're saying?
Very right.
Got it. Last question for me. If I think about the two-wheeler industry, obviously it's not hit the peak of 2019. And obviously recently there have been signs of growth. But then there is a debate whether that is sustainable or not, whether the growth is because of elections or not. And I was just attending another channel check call where one dealer was saying April growth of 30% in wholesale is there, but May, June, at least in May, the secondary is not that good, right? So, given you are largely a two-wheeler rank and you speak to multiple OEMs, I think you will be the best person to ask this question. How much growth do you think, high confidence or high conviction growth that can come in two-wheeler industry volumes?
So basically, as you rightly said, that the 18-19 levels have still not been achieved. However, post the H1, we have seen good growth in the two-wheeler segment. Also, in the coming months, also there is a quite upbeat in terms of the growth. And since they have not reached the 2018 level, so all the OEMs are very optimistic that this year will go okay.
We are expecting a growth of at least 8 to 9% in the two-wheeler segment in this financial year.
Got it, sir. Got it. I have one more question, but should I get back to the queue or should I ask?
Go ahead. You can ask,
Sure. So, sir, this is a non-data question. So, I've heard this from multiple ancillary companies, like everyone is striving to outperform, the end client industry in auto. And coupled with this, there is the narrative of the lightweighting, right? Which is both for cars and bikes as well. I'm just trying to think, when you speak about outperformance, theoretically, I can think of 2 to 3 things where it might come from, right? Number one, it could be there is a part, obviously new parts are not coming into the bike, right? The part remains, there always used to be a part, probably steel or some other alloy is being converted to aluminum. That could be one source of outperformance. Number two, could be you're winning a new client or you're taking away share from a competitor. Or it could be that, for example, cylinder head could be a part where OEMs used to do it in-house and now they're outsourcing to vendors, right? There could be like 2 to 3 such factors. Which is the dominant factor that is driving outperformance for you out of these? I understand these 3 would have a role to play, but could you pick out one?
So, as you rightly said, in the industry growth, whether it was the Q2 or the annual, like if you see the annual industry growth was 10.3% and we have done 17% revenue increase. So that 7% has basically come, as you rightly said, it comes from our existing customers also, where there is lightweighting, heat management, and good part is aluminium being a light metal and a lot of focus even in EV for the lightweighting increases the potential content per vehicle. Also,
okay.
we are seeing new customers, we are seeing new markets, new territories. So exports is another factor which is playing a good role there. So these are some of the factors which you rightly said, that it's new products and also the new customers.
Got it, sir. Thanks a lot, and I'll get back to you.
Thank you.
Thank you. We have our next question from the line of Sarvesh Arora from Summer Wealth. Please go ahead. Mr. Sarvesh?
Hello, am I audible?
Yes, please go ahead with the questions.
So if you could please provide some guidance on the expected revenue for FY25.
As we have already maintained that we'll definitely outgrow the industry, and as I mentioned, we expect the industry to grow 8 to 9%, so we are definitely growing in the double digits.
And do we believe that our margins are sustainable?
Yes, because now the Karoli plant, which was very functioning partially, now it is functioning very well in this Q1. And this is going to give us a lot of economies of scale, and we are confident that we'll be improving our margins by 100 basis points.
Okay, sir. What are the factors that contributed to the top line and bottom line growth in Q4FY24?
Q4, see, last year there was the volumes were very low because of the OBD2 norms, of the government. So the production of the two-wheeler was the worst possible. So that's how you see a substantial growth in the Q4, That's one of the main reasons. But as you see overall, in the FY24, we have performed quite well.
Okay, thank you, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Naveen Kumar Dubey from Narnolia Financial Services Limited. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. And first of all, congratulations on the strong set of numbers on all fronts. My question is related to the, aluminum lightweighting product segment. And so what kind of market size do you see there? Because we are seeing a strong growth there. So, and industry trend reflecting that we are going towards the lightweighting of the, vehicles. So how do you see the market size there?
The industry is growing at about 7 to 8% as per different sources, and aluminium content, especially in the EV, is increasing by 30 to 50%. And the same is true, more and more demand from the exports. So we see a significant growth in this particular segment of because of lightweighting and heat management. And even in the passenger cars, more and more electronics is being introduced. So more and more, because of the heat dissipation qualities of aluminium, there is more and more requirement and more consumption of aluminium in the cars, EV cars.
Yeah. And sir, one question regarding the capex that you have done in last 2 years, actually, that's close to around 600 crores. So what kind of revenue potential that we see in next 3 to 4 years from there?
See, in aluminium side, our asset to turnover ratio is 2:1. So, in fact, as you rightly said, about 600 crore expansion investment we have done. So 380 we have done, 200 we are in the process of doing, in this year. So this will cater to our growth of 1,200 crores,
Okay, 2 times.
So basically, after doing this 200 crores in the south, will be sorted out for the next financial year also.
Okay, perfect. Sir, one more question related to the non-current investment that has increased from 4 crore to 21 crores. So what kind of investment that we made?
Hi, this is Sanjeev Arora, Head of Investor Relations. This is mainly on account of increase in profitability from our joint venture business. As you have seen, and Mr. Rathi commented that last year we turned around the joint venture business, which was having a 6 crore loss last year, and it has moved to profit of 16 crores. So net of tax profit has got added to the balance of non-current assets.
Okay. Thank you. That's it from my side.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Jainis Chheda from Spark PWM. Please go ahead.
Hi. Congratulations on a good set of numbers. My question is relating to a bit of long-term period, maybe next 3 to 5 years. Is it possible for us to reach the historical margin peak of, say, 12 to 13% over the next 2 to 3 years as we sweat our assets more?
Yeah, historically we have always been around 12%, so sometimes plus, sometimes minus, and I think we'll be reaching. We are confident of reaching there as we utilize our capacities, continuously, which we have started utilizing from this quarter.
And after the Bangalore and the Rajasthan plant, is there any new plant or a greenfield expansion that is there in the discussion?
Yes. Next part,
Can you please repeat your question, Jainis?
Yeah, sorry. After the Rajasthan and the Bangalore plant, is there any new greenfield expansion that is there in our discussions?
So hi, this is Aman. as we mentioned that the Karoli plant as well as the Bangalore plant will take care of our next 1.5 to 2 years of growth. So as of now, there is no, but yes, that will be our endeavor to keep looking for space, and it has been our philosophy to be ready for the growth much ahead.
And one last question on the borrowings bit. How do we see borrowings for next couple of years moving?
See, borrowings, we are very, very conscious of the debt part because our internal accruals are also very, very strong. We are a cash-generating company for the last 30 years. And so we keep a very judicious balance of debt. And general philosophy of the company is to keep the debt around 1 year of EBITDA level.
Any possibility of this to come down?
It will come down.
We'll be investing the incremental cash flow that is generated from the business into expansion, or it will go towards debt repayment?
No. See, we are very conscious that if we invest 300 crores and we use partially our cash generation, so we don't take that much debt. So that's what I am saying. We are consciously, we don't like we like to keep it around 1 year of EBITDA numbers.
Understood. Thank you so much. I'll join the queue.
Thank you. And as you see, our debt equity is also very, very healthy. It's only 0.42.
Understood. Thank you.
Thank you.
Thank you. A reminder to all participants, you may press star and one to ask questions. A reminder to all participants, you may press star and one to ask questions. A reminder to all participants, you may press star and one to ask questions. We have our next question from the line of Basudev Banerjee from ICICI Securities. Please go ahead.
Hi, thanks. That's for the set of numbers. A couple of questions from my side. One is a few months back when we were discussing that passenger vehicle aluminum casting exports size, you are expected to reach 300 crore in few years' time from sub 100 crore level. So currently where we are like from a quarterly rate perspective and how one should look at it coming out in fiscal 25-26 and what kind of orders specifically you would like to highlight?
Now, Mr. Basu, what we were discussing and we told you these are the orders that we are negotiating and we are very likely to get. We are in advanced stage, but that cycle starts from 27-28 and for the next 6 years. They are very big orders, but for 6 years. But the cycle starts 27-28 only.
Sure. Second question, sir. As you mentioned on the JV for the segment.
Some degree of certainty, can you tell that these products will come into the market?
See, as I said, that our collaborator from Taiwan is a leading player in Taiwan, and he is supplying to the best two-wheeler in Taiwan, that is Gogoro, So it is a proven product by him. So with that kind of technological backup, we'll be bringing the product and testing on the Indian roads along with our OEMs, already OEMs. And so as per the results of these, I think some results will be out definitely by Q1 of next year.
Okay. So you indicated that with HPDC, the weight would be lower.
Yes.
In terms of operations and all, would it be, let's say, maybe cheaper to manufacture or more cost effective, maybe more margin accretive? How do you see the financial performance of this?
Because of the lightweighting and because of the HPDC process, if it succeeds, then there'll be a better productivity, slight reduction in the cost, and smoother supplies to the customers. And even in the EV, where, as I said, the lithium consumption of the battery is related to the weight of the vehicle, I feel it will be very much appreciated. That's our confidence.
Okay. Thank you. And just a final thing on if you can indicate what kind of content per vehicle currently based on the product that you have right now versus the products that are in the making and you will be introducing in the next couple of years. How much can your content per vehicle improve by post that?
Well, we can't quantify it at the moment because it will all depend on the success of the new products. But endeavor is to continuously go for new technologies backed up by the world-class players and improve the content per vehicle and also add to the number of customers. And that's how, because that's the only way you can outgrow the market.
Yes, definitely. Thank you for taking my questions. Thank you so much.
Thank you so much. Thank you.
Thank you. We have our next question from the line of Jainis Chheda from Spark PWM. Please go ahead.
So, one last question from mine. What will be the revenue from top 3 customers for FY24?
Sorry, can you repeat the question?
What will be our revenue from top 3 customers for FY24?
Top 3 customers. Okay, that's
maybe we'll have to correctly check, but it may be around. Okay, I think Mr. Naresh.
Yes, this is Naresh Sharma. It's around 60%.
Okay, thank you so much.
Thank you. We have our next question from the line of Kunal Ochiramani from Kitara Capital. Please go ahead.
So one last question from my side. When you say your partner is from Taiwan and is the best seller in the country, do you think India is comparable to Taiwan?
Why not? We never underestimate ourselves.
I mean to say the condition of roads.
Condition of road, that is, as I said, that is what is to be tested,
That has to go through testing.
But the way I think we are confident, the way the roads are improving, I feel our product should test well. Yes. Should succeed in the test.
Okay, thank you so much.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. A reminder to all participants, you may press star and 1 to ask questions. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you very much. Thank you everyone for such patient hearing. And as a closure note, I would like to say that we'll keep on working hard the way we have been doing in the past and try to show good results. That's what all I can say, because that's our job, which we will like to do properly and come up to your expectations. Thank you very much once again.
Thank you very much.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you, everyone. Have a good day.